Now, the gold producer Pan African Resources first half year revenue increased by 32% to 38.3 million British pounds. Here to discuss the results with us now is Jan Nelson, the CEO of Pan African Resources. Jan Nelson, thanks so much for your time. Earnings before tax up 51%, earnings per share up 56%. I think a strong set of results. What did you do right?
Well, I think, to be honest, our production results were fairly flat for the period that we reported on, and mainly the upside or uptick in the revenue was due to the gold price that we received being about $300 per ounce higher, and also the weakening of the pound against the rand.
All right, let's talk about that, because how much longer can you continue to depend on the gold price, for instance? Revenue is up 32%, largely because of improved conditions in the mineral space.
Look, we had a once-off problem with security costs that we have resolved. So our total cash costs in rands were 176,000 rand a kilogram. We've brought that down in the last quarter to 159,000 rand. So including our capex, we're sitting at 180,000 rand a kilogram. We're selling gold at over 300,000 rand a kilogram. So again, calls back on our strategy of low cost, high margin. So even if the gold price goes down, we've got a good margin, we've got our costs well under control, and that's what we need to focus on.
In March of 2010 was the implementation, obviously, of the royalty tax. It's compounded also by an increase in income tax. How did that impact on your balance sheet?
Actually, obviously did impact, but I mean, we declared more revenue, so obviously we pay more tax. And the royalty is something we have to pay, so it doesn't help to complain about it. We just need to produce more gold and keep our costs down.
I'm glad you talk about producing more gold, because as you said earlier on, your strategy has been low cost, high margins, but at the moment you're producing about 100,000 ounces of gold. Production costs rising, as you rightly admit. Is it a viable strategy? Because we have seen in the last 3 years that you can't really rely on the gold price.
No, I think you can't. Management, the issues that are in management's control is productivity improvements and cost controls and growth. And that's what we'll focus on, and I think if we take care of those things, despite the fluctuation in the gold price, we'll do well. We are developing an exciting project near the mine that could within a year give us an increase of 25,000 ounces in our production at a cost of less than $300 an ounce. So those are the things we need to focus on. Operational issues, there's nothing we can do about the gold price.
Obviously, you transact both in South African rands and also in British pounds. How have you been impacted on by the exchange rate?
Well, in the period that we reported in, the rand has strengthened by 10%. So it did have an impact of about 10%. But again, we focus on the operational issues. Exchange rate is something that sometimes is in your favor and sometimes not.
Okay, certainly at the moment, I think, in your favor. Your business unhedged and debt-free.
Yes.
Can you continue on that tack, especially because you've got major capital developments in your Barberton mine?
Yeah, we've got currently about 170 million rand in the bank. We can fund all our capital development projects from internal cash flow, and that's also after a significant dividend payment to our shareholders that we will continue. So we can certainly fund all our organic growth opportunities.
And how much more expensive has it become doing mining? And this is just a generic question. We're told that obviously in South Africa gold is a finite resource. It's getting deeper into the earth's surface now to take it out. So obviously part of those capital expenditure costs is the technological importation costs. How's that impacting on you?
Well, I think we're fortunate at Barberton. It's shallow mining, it's high grade, it's a high grade ore body, and the projects that we are developing are on surface. The project that we're developing is a treatment of a dump. It's on surface. So again, we don't have those costs like the deepest South African gold mines. So we're fortunate, I think, in that respect.
Let's talk about what you're doing at the Phoenix mine and your foray into platinum mining.
Yes, well, we will start civil construction on our plant in the beginning of March. The plant will be completed by the end of September, and then we'll be producing about 12,500 ounces of platinum platinum per annum, and that will virtually give us half the revenue Barberton generates at the moment. 40 people on a plant, there's no underground mining, so again you can see low risk, high margin. Those are the type of projects we like.
And you're entering into a partnership with Shanduka.
Yes.
How's that going to give you market advantage?
Well, I think if you look at Shanduka and the investments they make, they're very credible. They've got access to capital, so it's not just an empowerment partner, it's a strategic partner. They've bought into their stake in the company. They've got a good network in South Africa, and there's a lot of opportunities that come our way as a result of Shanduka. So a very good partnership that we have with them.
And just a final question, and this one has to do with the general operating environment in South Africa. A lot's been said about nationalisation. Yes. I don't need you to add your voice to that one, but is this the time to be putting a lot of money in mining operations?
Absolutely. We've operated in several jurisdictions in Africa, and we're a mining company. So we want to mine and build expensive projects, huge capital outlays, and you cannot get a better country despite all the issues in South Africa, because if you want to build a mining project, you need infrastructure, and South Africa is still way ahead of the curve there, in our opinion, in Africa. We like it here, and if people want to go, more opportunities for us, so it's great.